Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 29th, 2025, and we're diving into Modine's second quarter fiscal 2026 earnings report. Modine, a leader in thermal management technology, has just released its latest financial results. Joining us today is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Modine's report is quite interesting, especially with their strong performance in the climate solutions segment and strategic acquisitions driving growth.
Revenue and profitability overview. Let's start with the top line. Modine reported net sales of $738.9 million, a 12% increase from the previous year. However, net earnings decreased by 3% to $44.8 million. John, can you explain this dynamic?
Absolutely. The increase in net sales was primarily driven by the climate solutions segment, which saw a 24% rise in sales. However, the net earnings decline was due to increased costs related to capacity expansion and a $4.1 million impairment charge on real estate in Europe. Despite this, Modine's adjusted earnings per share of $1.06 beat the forecasted $1.01, showing resilience in their core operations.
Segment performance and strategic initiatives. Modine's climate solutions segment seems to be a major growth driver. Can you elaborate on the performance of their segments?
Sure. The climate solutions segment reported sales of $454.4 million, a 24% increase, largely due to a 42% surge in data center sales and a 25% increase in HVAC technologies. This growth is supported by strategic acquisitions and strong demand. On the other hand, the performance technology segment saw a 4% decline in sales, primarily due to weaker demand in on-highway applications.
Operational efficiencies and future outlook. Despite the revenue growth, Modine's gross margin decreased by 290 basis points. What are the factors behind this, and how is the company addressing them?
The decline in gross margin to 22.3% was mainly due to increased costs from expanding manufacturing capacity for data center products. However, Modine is actively managing its SG&A expenses, which decreased by $1.6 million. The company is also focusing on operational efficiencies to improve margins in the future.
And what about their financial position and outlook?
Modine's net debt increased to $498.3 million, primarily due to borrowings for acquisitions and capital expenditures. Despite a negative free cash flow of $30.3 million, the company is optimistic about future growth, particularly in the climate solutions segment, and has raised its full-year revenue guidance.
CEO's vision and strategic direction. Modine's CEO, Neil D. Brinker, has shared some insights on the company's strategic direction. What are the key takeaways from his statements?
CEO Neil D. Brinker emphasized the strong organic growth in the climate solutions segment, particularly in data center solutions. He highlighted the company's strategy to expand manufacturing capacity to meet accelerating demand. Brinker is confident that these expansions will fuel long-term growth, with a target of achieving over $2 billion in data center revenue by fiscal 2028.
Key takeaways. In summary, Modine has delivered a strong performance in Q2 fiscal 2026, with significant growth in the climate solutions segment and a raised revenue outlook. Despite some challenges, the company's strategic initiatives are positioning it well for future success. Thank you for joining us, John.
Thank you. It's been a pleasure discussing Modine's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Modine's performance in the comments below. Until next time.